Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the small caps that were in play on Friday, and also CRC, which is now, since the reverse split, it's no longer a small cap. It trades at like $30 a share, but most of these, it could be a small cap, but not a penny stock. Most of these, all of them are penny stocks except for CRC, and they all are considered small caps. And so if you look, or even micro caps, if you look at BSPM here, it closed up 29%. RSI at 54. You want to see Fasto get above 50. Nice bullish crossover there on ADX with the green line crossing the red and the black line to the upside. And so there was a nice move on Friday. It made that breakout above the 50-day simple moving average, but it did hit resistance up here from March, and it pulled back. It hit this high close resistance level. Notice how that was the top, and then it totally pulled back. It needed to close above that 50-day simple moving average. It failed to. It also closed right at the 100-day simple moving average. It needs to get above both levels. So on Monday next week, if it's trading above 307, above that 50-day simple moving average, it'll signal more upside, and it could work its way back up to that $4 level. It will have to bust through that upper Bollinger Band again. If you see it drop below that 100-day simple moving average at 287, that would put the middle Bollinger Band back on deck at 261. It needs to hold that level to keep this new uptrend going. And notice there was a big volume spike on Friday. Now, even though the share price was up and on a big volume spike, there was a tick down on accumulation distribution and a spike down on shaken money flow. That does signal dilution. You know, with the long upper wick, they dump shares into the run. You want to see a spike up on both of these indicators on a bullish green day like that. Notice there was a bullish crossover on MACD on both time frames. So you want to see that the MACD line, the black line, stay above the signal line, that purple line. Okay, let's look at the next, let's look at it on the 15-minute chart, and then you can see BSPM here broke out above the 300 simple moving average in the first candle of the day, and then this spike right here, you can see the long upper wick from high of day followed by the red candle. This was your signal to lock in gains if you're a day trader, and the candles did work back. When the middle Bollinger Band broke back here at 145, that was a red flag. It closed below the middle Bollinger Band, which according to our rules makes it a risk to hold overnight. So this was lock in gains on Friday type of play, just to play it safe. If it gets back above $3, it'll be back in play. If that turns into resistance, you're going to see that 50 simple moving average at 262 tested. It needs to hold that level to bounce off of, and to try to stay bullish there on the daily chart. Okay, if you look at EARS, it also closed up 29%. So this was a big move. Closed at 61 on RSI. You can see this is the highest level close on RSI in quite some time. You want to see Fasto get above 50. At 44, there's still juice in the tank to run higher. The reason why there's juice in the tank is because of this long upper wick. Check out how they drove it down. It came up and it hit this key resistance level. There was a gap between high of day on this candle and low of day on this candle, and as you can see, the share price came up and hit near that top of the gap level. 250 is going to be the big level to break if it can get past the green line. It pulled all the way back and closed below the 50-day simple moving average. That was a really nasty close there. You know, it needed to close above that level. It needs to be trading above 181 to head higher. Notice where it pulled back to the bottom of the gap level. The bottom, this is the top of the gap. This is the bottom of the gap. The gap is the big space in between these two candles. You can see the gap filled on this wick right here, but the bottom of the gap level is still always a crucial resistance level. It's like a 200-day simple moving average or a 300-day simple moving average. It's just a very big, strong, difficult level to break. And so going forward, if it can break above that level, that'll signal upside potential. Now, if it fails to break, you could see the gap below. There's a gap between these two candles, between low of day on Friday and high of day on Thursday, and so a drop down to EMA 13 at 148 would fill the gap. It needs to hold that middle Bollinger Band down at 140 to keep the uptrend going. Once again, look at the huge drop on accumulation distribution. I mean, it fell off a cliff. Look at the big spike down on shaken money flow. That is not what you want to see when a stock has a giant volume spike and it's up 29% on the day. It just signals dilution. If you look here on the 15-minute chart, you can see all the magic happen in the beginning of the day. Look at the big volume, okay? And then you have the big volume followed by the red candle. You know, this was your signal to lock in gains. You could have locked in gains on any of these three candles and it would have been the right call just because you had the long upper wick with the, followed by the red candle. You know, it kept on trying to push, but this was your real key here, that it was breaking down. Notice how it failed to ever get back up to these levels, and so that was a red flag. It kept making lower highs. And so, it formed this, it formed a descending, a downtrending channel here. And yeah, it did break above it temporarily here. It got above, and then it came back down. The big thing going forward on Monday, it's going to be all about this middle Bollinger Band. It has to get above that 184 level. If it can turn 184 into support, then $2 is going to be a big level to break. If you see 184 turn into resistance, failing to break that level, you could see a drop down to the 50 simple moving average at 167. The downside risk is it drops down to fill the gap, which would be the high of day on the 3rd, which would put it all the way down to here. So a drop down to the 200 simple moving average at 148 would fill that gap. Okay, let's look at CRC. So yeah, this does trade at $31 a share now. It had a reverse split a while ago, and it has been in this nice uptrend. It closed up 22%. Check out the big breakout on Friday. It broke out above, you had the high close here, and then it broke out above that level a couple weeks ago. So this was your clue that it was ready to head higher on this white candle that closed above the previous high close. I guess it was actually that candle, but this candle right here was the big signal, and that level turned into support, and then there was a big breakout higher on Friday. Now there is an unfilled gap between high of day on Thursday and low of day on Friday, so if the candles did work back into the bands at some point, a drop down there to 2650 would fill the gap. Okay, Friday's candle did close above that upper Bollinger Band. Sometimes the candles will work their way back in. You want to see EMA4 at 27.95 hold. If it stays above 28, the chart's still super strong. Look how it's just been pushing. This has just been a really good swing trade chart. If you're a longer-term swing trader, you look to enter on the break above the middle Bollinger Band, and as long as that level holds, you just keep riding as long as it's riding above EMA's 4 and 8 support. Sometimes the best thing to do is nothing and just keep riding. Now that said, you have to be looking for a temporary pullback, and so it is on this huge run. Notice that it has an increasing volume pattern with 5 green volume bars in a row, 5 white candles in a row, and so it broke above high close horizontal resistance, which was the closing price here in January, and so the close above that level last week did signal more upside potential. Notice how this had been a big resistance level. I drew an ascending resistance line there, and you could see how it has ascending support. And so it had this big multi-year pattern, and on Friday it broke out above the top of that channel. So that signals more upside potential. You can see the key level to break is going to be this 35 zone. So you could see where this was, when it broke below, it turned into resistance. It got above, and then this 35 is a big level. If you can break above 35, it could work its way back up in this 45 to 50 level. That was the previous high close. I mean, it looks like that's where it wants to head. Just not sure if it's going to do it in a straight line. Last time it had a big close like this above the upper Bollinger Band was on this candle back here in November of 2017, and that was followed by red candles. The candles could work their way back into the bands all the way down to EMA4 at 26, and the chart would still be incredibly bullish. So just keep that in mind. Maybe if you miss the run and you're thinking about jumping in, and you don't want to chase, if that EMA4 on the weekly chart were to hold on a test, and that would be an entry level. You'd want to see it stay above these red lines. Okay, if it does break below EMA4, that's what happened on this red candle right here, and then that signaled the downtrend. So you don't want to be holding, once there's a close below EMA4, because that's going to be the bearish change in trend on the weekly chart. Okay, let's look at SDRL. It closed up 12% on Friday. It's at 56 on RSI. Fasto's at 33, so it has a lot of juice in the tank to run. And notice how this one didn't have the long upper wick. This was one of the plays in our chat. It has the, I guess, we did mention the other ones as well. But yeah, it seemed like people were kind of liking this play. And, it bounced right off the middle Bollinger Band. It had a little volume spike. It is a thinly traded stock. It bounced right down here off of the 50, 100, and 20-day simple moving averages. The middle Bollinger Band is the dotted purple line. It's also the 20-day simple moving average. And then it closed above the red line, which is the 200-day simple moving average. So that was a really bullish close above that 200. Notice how, all these candles here, these candles were trying to break and it failed. Finally closing above does signal more upside potential. If it can get above 30, which was the closing price on this candle, it could make its way back up here to this 36, 37 level. The closing price right here is the recent, on the 18th of April, is the recent high close level to break. Above 37 would be extremely bullish. Now, if it drops back below, at 29, you see it trading at 28 or lower, below that 200-day simple moving average, currently at 284. That would just signal more consolidation, not ready to go. It would put it back in this channel. The channel right now It had been the top of the channel was the 200-day simple moving average, and the 50-day simple moving average was the bottom of the channel. So the close above the top of the channel signals more upside, but if it were to pull back into the channel, it would signal more consolidation. Okay, let's look at the SDRL 15-minute chart, and you could see here it had the the nice bullish move. It pulled back, but it's currently above all the moving averages. Let me get it onto the annotations. You can see here it turned the blue line into support, which is the 300 simple moving average on the 15-minute chart. As long as that level's holding, it signals more upside potential, and then now it needs to stay above the middle Bollinger Band as well. That's the 28 level. Basically above 28, and it's going to be looking good. If it drops down below that level, 27.5, then it's going to signal it's not ready to go. Consolidation, it needs to break above high close up here. Okay, so that's the top of this candle right here, and that would be a signal that it wants to head higher. Okay, and so this is the bottom right here. So this is the plain field. Breakout above signals upside. Breakdown below signals consolidation. So this was a nice move. We'll just see if it can follow through. Let's look at RNN here. Closed up 22%. Now it does have RSI at 80 and FASTO at 88, and there was a parabolic spike here on plus DI. And as you can see, this is the highest level for plus DI in quite some time. You can see the previous high was back here. So this is just signaling the chart is pretty frothy right here. It closed well above the upper Bollinger Band, which is down here at 197. And so basically what you want to see if the candles did work back into the bands was this 200-day simple moving average at 201 hold. You know, the candles could work back into the bands, bounce off the 200-day simple moving average. Keep in mind the upper Bollinger Band and EMA4 are rising, so they'd be catching up with that level, and it could bounce off and continue the uptrend. Now if it decided to keep breaking out higher, what you want to see is a close, okay, above this 225 zone. You could see this was resistance. Look at all the candles that hit this level and failed to break. Finally, this candle broke above and it ran up, and so you'd be looking for a run to 245 if it breaks above 225. A close above 245 would put the 300 simple moving average at 261 on deck. Notice how that was the previous high for January, was hitting that 300 simple moving average, and it pulled back. It's always the sell zone unless there is a close above. Okay, let's look at CVGI, closed up nearly 29%. Yeah, let's just look down here at the, okay, so you have RSI at 66, and so it has room to run until 70. You can see on a previous run it got above 70. FASTO's at 78, so it's still not at that 80 level. It has a little more juice. You have the bullish cross over here, the green line plus DI crossed above the red line, minus DI to the upside. Now what you want to see is the green line cross above the black line, which is 80x, and that would be a signal the bulls were really strong. There was a gap up open, so there's a gap between high of day on Thursday and low of day on Friday, and so if this resistance levels failed to break, what you'd be looking for is possibly that gap could fill. Now this is this looks like an island reversal pattern. You have a gap over here between low of day on this candle and high of day of this candle, and then you have this cluster of candles here, and then another gap up open. Many times a stock will break out higher after forming an island reversal pattern, so it doesn't necessarily have to come down and fill this gap, but it could. It very well could if it fails to break the $9 level. That's this red line here, which is the 200-day simple moving average. If it can get above that, then the next level is the 100-day simple moving average and the bottom of this gap from March. Okay, so that's going to be this $9.75 to $10 level. It has to on this chart, the top moving average is the 100-day simple moving average. If it can turn that into support, it could get moving, and you could see a run to the top of that gap at 1075, and then what that would do is that would fill the gap. Okay, so that would be a gap fill. A run up to 1075 would be the bottom of this candle, and that would fill this unfilled gap. So that's the upside potential, and then that might be like a climax event if it did do that. If it fails to get above these moving averages here, and then you could see it's above the 50 and 300-day simple moving averages. If it were to drop below 840 there, you could see it pull back into the bands. It needs to hold the middle Bollinger Band down here at 727 to keep the uptrend going. Notice there was a giant volume spike. So yeah, so keep an eye on it. If it's trading above 9, it could head higher. Let's look at ICOIN. Okay, so this is the Iconics brand. This is the company that gave Jay-Z all that money, and then now he's in some trouble with the SEC. And so the whole Jay-Z Iconics brand deal has put ICOIN back on the spotlight. And so, ironically, with it being talked about for the first time, I haven't thought about this company forever, and then it's back in the spotlight, and now it's bouncing. And so it caught people's attention. It did close up 25% RSI is above 30, Fasto is above 20. I mean, it's in a very bearish downtrend. The downtrend started back here when the middle Bollinger Band broke back in February, what is that, the 28th on this red candle. It tried to get above it here in March and failed. The middle Bollinger Band is the dotted purple line. And so notice it's just been in a multi-week downtrend. Now on Friday, it did close above EMA 4. That was the first close above that level since back here in April. It's going to need to get above EMA 8. It failed to close above that level. If it gets above EMA 8, that would be the first close above EMA 8 since way back here on this black candle in March. And so that would be bullish. So keep an eye on it for above 76, and then it has to close above that level. Now, if it closed below EMA 4 at 70, that would make it a risk to hold. Keep in mind, a dead cat bounce play like this is the riskiest trade to make. It's in a bearish downtrend. You know, it's the riskiest long trade to make because many times bounces are just short cover rallies, and resistance fails to break, and the downtrend continues. You'll know whether or not this is a risk to hold by whether or not ICOIN can close above EMA 4 on the daily chart. Now, there was multiple red candles in a row, and bullish one white soldier reversal pattern did form. So be looking out for another white candle and a higher close next week for a higher close than the closing price on Friday to confirm that reversal pattern. In order to get a new uptrend going, it has to close above the middle Bollinger Band at 90 and turn that level into support. Okay, until it does that, it's still in a downtrend. Now it could run up here to the EMA 13. Notice how these candles hit that orange line, okay, and it got close right here, and so it tends to test that level on a bounce. If it hits that level at 81 tomorrow and that fails to break, it could be like these previous candles and pull back, so that would be the profit taking zone if it failed to close above. Okay, let's look at EYES. Okay, this is eyes, closed up 11.5%. You want to see RSI above 50, similar to Fasto down here at 62. Check out how ADX is pinched here. We have the green, black, and red lines all pinched. If that green line can shoot through those other lines, that would be a signal the bulls are taking control. Now this is a thinly traded stock. It did have a bounce on Friday. What we're looking for is a close above the middle Bollinger Band at 166. If it can close above that level, that would be a signal that it's heating up, similar to back here in March when it closed above. After trading below, it closed below back here. All these candles are below. Then it closed above, and that's when you add a little bit of upward action. And so what has to happen is the 166, 175, the 50-day simple moving average, and 183, the 100-day simple moving average. So those are the three upper resistance levels to break. Once above that 100-day simple moving average, it could possibly run up here and test the recent high close at $2. And so as you can see, it's in a, this is basically a sideways channel, and it's bouncing off of the bottom of the channel right now. And the top of the channel is up here at $2. So get above 160. It has work to do to get through moving averages, but keep an eye on it. Maybe it'll heat up. And let's look at XXII. So yeah, from my understanding, this is in the marijuana sector. It closed up 9.5%. You want to see it break above 50. You want to see Fasto stay above 55. Notice the crossover here on ADX. When the red line crosses the black line to the downside, that's a signal the bulls are actually heating up. Notice plus DI is ticking up the green line. There was a close on Friday above the middle Bollinger Band. That's what we were looking for, when we were discussing this in the chat on Friday. So it did close above. It needs to stay above 220, and then it needs to stay above the 300-day simple moving average at 216. If it can hold both of those levels, the next target is the 50-day simple moving average at 237. Notice how that's lining up with the recent high close. And so, yeah, it needs to get above, 240. And so 237, 240, and then it could possibly run up to 255. Now, if it failed to hold and stay above 220, that would be a signal it's not ready to go for a long trade. And then if you look down here, MACD is really heating up. You have the bullish crossover on the 1226 and 9 and the bullish crossover on the 813 and 5. So those are signals that the chart's heating up. When the share price hits this 229 level, the green dots will flip below the candles, and that could signal a possible start of a new uptrend. Okay, let's look at KONA. It closed up 14%. This is another one of those long upper wick charts. Look at that nasty long upper wick. I mean, it hit 295, and it was above that 200-day simple moving average, but it pulled below. It needs to close above the high close resistance level, which you can see here. 220 is a huge resistance level to break. And if it closes above 220, that would be a very, very good sign for the KONA bulls, because that was just been the major resistance level to close above. That would put that 200-day simple moving average on deck. If it did close above the 200-day simple moving average, that's when the chart could really heat up. You have the 300-day simple moving average all the way at 319. If it fails to break this 220 level, then it's going to stay in this basically sideways channel. You've got a channel going on. The bottom of the channel is at 155. The top of the channel is at 220. It's right now it's near the top. And so what you want to see is this 50 simple moving average at 190 hold. You know, it needs to stay above the 50 and 100-day simple moving average, the middle Bollinger Band, and then it needs to push above the 200-day simple moving average, and that'll signal it could head higher. You know, if it fails to, then it's just going to consolidate in this zone. Look at accumulation distribution and shaken money flow. Those are major red flags. When you have it drop off a cliff like that, you know that's signaling you know, they dumped heavy into the rally, and you know it's just a red flag. It's a signal not to hold. You know, when you see this form, the long upper wick, you know, it's a signal to head to the sidelines if you're long. Okay, let's look at DCAR. Okay, closed up nearly 7%. Keep an eye on the stock. It's thinly traded. It hit above the 50-day simple moving average on Friday and temporarily broke, but it pulled back below, and it also pulled back below the middle Bollinger Band at 190. And so if it can get above 190 and close above 204, it could possibly heat up. It closed above the 50-day simple moving average in April, and it broke above it temporarily, but each time it failed to stay above and it pulled back. And so and you could see back here in February, it got above the green line and failed to stay above, and it did the same thing on Friday. So once you finally see it close above and then stay above that level, that'll be the bullish change in trend. That'll be the signal it's ready to go, and that'll signal more upside potential. So just keep an eye on it. We'll see if it can turn that level into support. Let's look at SGYP, closed up nearly 12%. Yeah, this is another one of those dead cat bounce type plays. It topped out up here at 225, got below the middle Bollinger Band back here in March, couldn't break back above the middle Bollinger Band in April, and now it's got the dead cat bounce thing going on. It looks like this black candle inside the red candle was a bullish homing pigeon. You know, you also have a bullish Haremy cross. You know, so you have these last two reversal patterns. I mean, actually that might have been confirmed there. And then there was the bearish reversal pattern. So, I mean, just looking at the, it looks like bullish homing pigeon was possibly confirmed here on Friday. If that was indeed the pattern, it looks like that's what it was. The black candle inside the red candle. Because it looks like here this was bullish Haremy cross confirmed on this candle. But it might not have been confirmed because it didn't get up to the halfway point of the candle. Yeah, so the bottom line is the stock looks like a piece of junk, but maybe it could get going because it had a nice bounce on Friday. If it can stay above EMA 13 at 161, then that would be bullish. It needs to get above that middle Bollinger Band at 170. So above 170 next week, okay, would be very bullish. If you see it drop below 160, that's going to be your signal, okay, it's not ready to go. If it were to close below EMA 4 at 155 down there, it would no longer be in play. If it's trading above 170, it closes above, that should be the signal that yes, it does, this is for real, and it does want to head higher, and then you'd be looking for a run up to that 50-day simple moving average at 186 and possibly up to that 100-day simple moving average up at 201. Notice that the green dots here that I was talking about early, SAR stands for stop and reverse. This is parabolic SAR. The green dots here were above the candles the entire time during the drop until Friday. They flipped below. So that's a good clue that the chart is heating up. Notice that on the 8, 13, and 5 MACD there was a bullish crossover. So that was, you know, signaling the chart's heating up as well. Now the 12, 26, and 9, the MACD line is still far from that signal line, but if it crosses over, that will be a reversal signal, okay, or a sign that the chart is heating up and could reverse. Let's look at SUNW for the final stock in this video. Closed up 9.5%. Very thinly traded stock, only 130,000 shares, but keep an eye on it. It did close above the 50-day simple moving average. That's why I put it in here. If it can stay above 99, then it could possibly get going. It has to get above 103. So that's the next big level. If it closes above 103 on Monday or next week, and then it can stay above, it could get cruising higher. What makes it interesting is this volume spike. Not last week, but the week before on Friday, 2 Fridays ago, there was this big volume spike. And so that does look like some people were loading. So maybe it might be able to push through resistance and head higher, since there was some, looks like some front loading going on here. So we'll just have to see. Maybe they'll have some news, something will come through, and it can push through resistance. With the close above the 50-day simple moving average, it's worth having on the radar. Just keep in mind, it's a thinly traded stock, and thinly traded stocks are difficult to sell once you buy. Okay, so yeah, thank you very much for viewing this video. Come check out the chat. I'll post the link below the YouTube video. You can come check it out this week for a free trial. Just give me some time to get you in after you sign in and welcome. You know, be sure to check on Monday to make sure that you have access to the premium channels. Everybody's welcome. Like you come check it out. Okay, thank you.